What is the difference between estate tax and inheritance tax? A lot of times people use them the same. They're very different. We're going to get to that in a second. Hey, welcome into the Real Estate Minute Show. Today we're talking about the difference between estate tax and inheritance tax and how that hits your wealth. Now, there's to start this off, there's federal estate tax, and then there's state estate and inheritance tax. It's a lot of states and estates in there, right? And right now, as it currently sits, there is a huge exclusion from the federal estate tax system. Right now, it is over $13.5 million. That's fully exempt until you get into the estate tax on the federal level. If you're married, it's twice that. The amount of people that have that is like about that thick. But nevertheless, they got a whole tax system for it. And it ranges, if you do go over that amount, it ranges between, I think it's about 18% all the way to 40%, depending on the amount of the estate. I think if it's $1 million or more, it's like 40% goes to the Fed. Insanity. And by the way, that is up and expires at the end of 2025, unless it's extended, altered, changed, or whatever they do at the end of next year. So I have a lot of clients that I've helped out that have done some planning over the last 3-4 years, making the assumption that in 2025 it's going to expire and go back down to whatever it was before. I think it was like $2.5-3 million, which is a vastly large difference, obviously, than the 13.5 it's at today. Now, getting to state estate tax systems, states differ all over the board like they do with law and taxes, okay? And there's currently only 17 states that have some form of estate or inheritance tax, okay? So that's pretty good. Good to look up, though, if you're looking to relocate. Oddly enough, California and New York are one of the highest tax states in the country. California, being one of them, has no estate or inheritance tax right now. However, as you look at states and where you want to be, and people are moving all around the country to help with costs and expenses, being that California is the most expensive state to live in, or number 2 at least, and they're running out of money, and the budget's being cut, and they're cutting programs, eventually there's going to be a breaking point. And they're taking hits now at changing laws and things that is on the ballot actually this year, rent controls, certain government-funded programs like that. Property taxes, they keep trying to snag back at Prop 13 in California, which limits the property taxes people pay. And you know that they're going to hit, and they've been increasing income tax, by the way, but you know they're going to try to take a hit at estate and inheritance tax because you got a lot of rich people in California, and they're going to try to take a slice of their wealth. But let's get to the meat of the episode, and that is, what is the difference between estate and inheritance tax? And it's very simple. Estate tax is what they charge, a state or the federal government charges the decedent's assets, okay? The person who died and left you something, let's say they have $2 million in their estate, they tax the estate, okay? They don't tax the beneficiaries. Inheritance tax is tax on money received from somebody who died, the beneficiary's receipt of the money. So they're opposite sides. And I believe there's 2 or 3 states that actually do both. So not only do they charge the decedent for dying, they actually also charge you for receiving the money. I mean, talk about double taxation. Loopy. So that's the big difference. Estate tax, they tax the estate. Inheritance tax, they're taxing you inheriting it, and they're taxing you personally. That's it. It's that simple. And to close this out, any estate tax or any inheritance tax is absolutely, almost by definition, my definition, double taxation. All of that money, for the most part, except for maybe some IRAs and things like that, are money that has been taxed in the past, either by sales tax, by income tax, by being hit by property taxes, meaning their assets, things like that. And then the government's taxing you again because they give you the right to die, I guess is the theory. I'm completely against estate tax and inheritance tax, as you might be able to tell. That's generally of the world of the tax that's involved when someone dies. See you next week on the show. Take care.